Hey everyone, thanks for joining us. Thanks for joining us on our webinar. You can buy a house in a low inventory market. We're glad that you're here. We hope the information that you get will be helpful for you and help make your home search a real success. We do have a lot to cover, and we're going to jump in a moment. But first, let me make some real quick introductions. I'm Ray Micus. I'm the principal broker at Greenlight Real Estate with offices in Montpelier and Barrie. Greenlight started in 2013, and since then we've helped, I had to look this up, over 1,500 people and families buy and sell property in Vermont. Tonight we also have Kate Root. Kate's the managing broker of our Barrie office. She lives in Barrie and has a background in banking. Kate's been an agent and a broker since 2017. We also have Krista Harness. Krista lives in Montpelier. She's worked for national political campaigns and brings a background in legal studies to the practice of real estate. We also have Patty Dupuy. Patty lives in Barrie. She has a background in lending, particularly on the nonprofit side, and she's been in real estate since 2022. Krista has also been an agent since 2020, I should say. We've got a good mix of viewpoints and experiences. We're about to dive in. We're going to have time for questions at the end. And then the slides themselves will be available for folks as well. Some of the slides we'll have to skip through because there's just so much to go through. But if you do want to speak with one of us at the end, or if you want to schedule a 15-minute conversation at the end, that's totally fine. If you don't want to, that's okay too. One last thing is, buying a home is a very unique process. Every single transaction is different. All buyers are different. All sellers are different. And we're going to be giving a good overview of some of the best practice to help win at buying a house in a low inventory market. But we only have so much time. So we're really just going to be scratching the surface. So with that in mind, let's jump in. First, we have Krista Harness. And Krista is going to be talking about some current events in real estate news and how it affects home buyers and home sellers. Krista.
Thank you so much, Ray. It's a pleasure to be here with everyone tonight to talk about how buyers can win in this market. As Ray said, we have a lot to share with you. We really appreciate you all being here. I'm happy to cover a topic that's been very intriguing to me as of late, which is the recent class action lawsuit and settlement agreement involving our trade association, National Association of Realtors. You may have heard some mention of it in the news lately because it has resulted in some notable changes to the real estate industry, especially in the last couple months. As of July in Vermont and August nationally, there's some new rules that have been put in place governing how we operate that may impact you as a buyer. Not only have changes been made to the MLS, the main database where properties are publicly listed for sale, but NAR has also agreed to significant procedural changes in terms of how buyers go about getting into homes. Whereas previously, if I met a buyer, I was allowed to jump right in and show them a property if I wanted to, giving me and the buyer a chance to get to know one another better over some time. Before the new rule changes, we could look at a few houses together as a learning experience, and then we could have a conversation about forming a contractual relationship once we were sure we wanted to continue to work together. I didn't always wait to have that conversation, but I could. Now, with these rule changes, buyers must have a representation agreement in place with the buyer's agent before they can tour a home. And that's one of the biggest pieces of news about this settlement that you should leave here knowing. The exception to that rule is that as a buyer, you can go to an open house without an agent, or you can choose to be unrepresented and work directly with a listing agent. However, as you probably agree, or you wouldn't be here seeking advice from buyer's agents, having the guidance of a buyer's agent is very important to protect yourself in this process. It's very important to remember that dealing directly with a listing agent can sometimes put you at a disadvantage because the listing agent represents the seller and only the seller. Nothing you tell them is confidential, and they have no fiduciary duty to you. They can facilitate a transaction, and they'll probably do it really well. But they don't represent you. They represent the seller. They do have to be honest with you. But if anything unexpected happens and you need to get through some tough negotiations, you won't have a representative on your side advocating for you and looking out for your best interests. So it's much better to have a buyer's agent of your own give you a tour of a property. It's important to note that we are able to set those representation agreements for one property at a time or for short periods of time. So it doesn't mean you're locked in forever. So that's the basic overview of the changes of how buyers get access to homes. Now let's talk about the changes of how agents get paid. The good news is that nothing much has changed. Historically, sellers have typically offered some level of compensation to buyers' agents side of things to help attract buyers to their property, and it's always been optional. Most of the time, sellers understand the benefit of offering the cooperative compensation to cover your buyer's agent fee, especially when they have a good listing agent who can explain it to them. However, what has changed due to the settlement is that the field indicating how much, if any, compensation is being offered has been removed entirely from the MLS. So now buyer's agents can't go in the MLS to find that information, but it's not insurmountable. Your buyer's agent can easily call the listing agent, or as a buyer, you can ask your agent to write that into your offer and see how the seller responds. Overall, these changes aren't drastic and the sky really hasn't fallen since they were enacted. It simply encourages a much more upfront and transparent process, an explanation of how agents on both sides get paid and which party is going to be responsible for paying. And it asks us to memorialize that everyone understands this rule in the formal agreement before jumping into viewing homes. For many agents, especially us here at Greenlight, we've always worked very hard to be as transparent as possible. Transparency benefits everyone in the home buying process. So speaking of the home buying process, it's my pleasure to pass the mic over now to my teammate, Patty Dupuis. As Ray mentioned, she comes to us with a lot of experience in the mortgage lending industry, which has been very valuable to our team. And she's going to go through the steps in the process and some really great pointers for you on how you can really be prepared as a buyer. So take it away, Patty.
Thank you, Krista. I appreciate that introduction, and thank you all for joining us tonight. And my portion that I'm going to be speaking on is financing and the pre-approval process. So in regards to one of the first things that you should do is to meet with your lender to find out how much you can afford for a mortgage payment. And when they're able to determine what your affordability is for the mortgage payment, it will also give you a price range when shopping for a home. The mortgage payment consists of principal, interest, taxes, and insurance. Lenders want your housing payment to be no more than 30% of your gross monthly income. When shopping for a lender, start with your currently have established accounts, such as your savings or checking account. Schedule a meeting with the mortgage originator. Now, if, as you can see, if you bring what you should bring to that meeting, 1 month of pay stubs, the 2 years of tax returns, 2 months of bank statements and retirement statements. Believe me, when you walk in with all of that, your mortgage originator is going to think you're a rock star. What they're going to do is they're going to review your credit, your income, your savings to determine what your affordability is. They will be able to provide you with a document once they've looked at your credit, savings, income to determine your income to debt ratio. They will issue you a document called the loan estimate that will show how much funds you will need to bring for your closing costs and your down payment based on what you can afford for a payment for the cost of your home. They will issue a pre-approval letter that is good for 90 days. After that, if you're not under contract, you will need to get that letter updated prior to making an offer on a home. Uh, okay, yes, interest rates. Wow, that's on everybody's mind. Last year in October, the highest interest rate peaked at 7.79%. Um, in mid-September of this year, the Federal Reserve is expected to lower interest rates by at least a quarter of a point. I just checked a local lender this morning, and I saw that their 30-year fixed rate mortgage was at 6%. So that's even before the feds have made a change. Now the next slide is what does that mean with in regards to the interest rates? So when we get a reduction in the interest rates, that allows you more purchase power, and a higher demand also comes from having everybody's jumping back into the market. Right now, we're in a lower inventory of the home market. So that causes bidding wars and strong competition amongst each buyer. Next, thank you. I just wanted to be able to show you an example of a different interest rate on the same property. So the purchase price was $319,500 at 7%, which was earlier this year. This particular person had 20% down, which was the $63,900. Their taxes, insurance. They didn't, because they had 20%, they didn't need private mortgage insurance. So their mortgage payment on the 255,600 was 1978. That 1978 took into your principal amount, your taxes, and your insurance. Now, on the other side, 6%. This is only with 5% down. Same amount for taxes, same amount for insurance. However, because they only have 5% down, they now have to have what's called private mortgage insurance, which was added into this equation. Their mortgage payment now with PITI is $23.88 on a loan amount of $303,525. So, how do you buy a home in today's market? So, the best advice is choose an experienced realtor who knows how to write winning offers that get accepted. Have a pre-approval, and then have sufficient assets to cover down payment and closing costs. When shopping for a home, shop below your means. So when I say that, let's say, for example, you've been pre-approved for $400,000. That's the amount. In today's market, because it's a low inventory and it's also a competitive market, look at a home is at $375,000. This allows you to sell for a chunk more than that. I'm sorry, I just got distracted. Your mortgage pre-approval won't cover the overage, and you will be an unqualified borrower. In a competitive market, don't get discouraged by presenting multiple offers before one gets accepted. Each offer that wasn't accepted will put you in a position for writing your next offer with your buyer's agent, whose goal is to get you into a new home. At this time, I'd like to turn it over to Ray Micus so he can explain how to do a home search in a low inventory market.
Thank you, Patty. So successful buyers, it's people who are actually buying houses and not just looking at houses. They know what they want. They're flexible, they're prepared, they're educated, they understand the process. They're also working with a buyer agent that they know and that they trust. In addition, and sorry, can we go to the mindset page? It's important to have the correct mindset. We'll get to some of those slides in the slide deck. The correct mindset is looking for a home that you can buy now, looking for, and then making into your dream home later, something that you can afford to live in, now, and you can afford to make it into your dream home later. The wrong mindset is going to be looking for your dream home, your forever home, your perfect home. If you have that mindset, then you're just going to be in a better spot to be more successful in your home search. Have the next slide, please. Okay, so it's really important to know what you want. And in this market with low inventory, you're not probably going to be able to say exactly what you want and narrow down and find exactly it. But if you can come up with a couple of really broad categories, you can probably have a really successful search. So some of those might be, what are a couple of towns that you really want? Be broad. And then maybe a broad price range. And then maybe, I don't know, do you want to be in town or do you want to be out of town? I was working with buyers recently, and this is exactly what we did. They identified 3 towns that they wanted to look in. They identified a really wide price range. They wanted to go around 400, but they could go up to 450. So we looked at a big wide price range, and we found 12 properties, which is not very many. So we didn't have very many. We had to think of some other ways to broaden the search, but also with 12 and with some strategies that we're talking about here today and that you'll talk about with your buyer agent, we're able to find them, get them into a property that worked out for them. The next slide, please. All right, so if 12 isn't enough, there's a magic formula, and it's not really addition, but location plus condition plus size equals a price. So if you need to make some changes in what you're looking for and what your search criteria are, you can think about what of these you might be flexible with, what you can change, what you're not willing to change. There is a house that'll fit, and there is a way to get in it and not overpay for it. Most properties are going to be listed on the multiple listing service. That means that realtors have access to it. Buyers do too, but realtors have like a lot of extra access, more information. There are always a small number of properties that are for sale by owner. Your buyer agent can get you into all of these properties, whether it's listed on the multiple listing service or whether it's for sale by owner. Your buyer agent can do it. Sometimes you'll get, when you're talking about your property search, sometimes you'll know about a house. It'll come up on Zillow or Realtor.com or Redfin or whatever website you're using. Sometimes you'll see it before your buyer agent will. And if that's the case, just let them know, hey, I saw this house. I want to go look at it. Sometimes your buyer agent's going to know first because there's all sorts of networking that happens. And also we're good at thinking, kind of creatively. Sometimes we'll find something first and we'll throw it to you, to a buyer, to see if they want to go and take a look at it. And then when, okay, here's a question that we come into a lot, which is what actually happens when you schedule a showing? Well, peek behind the curtain here. First off, when you see a property that you want to look at, schedule that appointment as soon as possible. Waiting a week to look at a property, that's not going to work. Later on, when we talk about some of the metrics in the market right now, that strategy doesn't work. So you're going to want to get in as soon as possible. And you're going to need to get used to making decisions fairly quickly. That decision can be as blunt as, yeah, I think I want to make an offer, or no way do I want to make an offer. But you're going to have to get used to making those decisions quickly. For scheduling showings, we need to give lead time. We have to coordinate the showings with the owners. So we give lead time. And then typically showings take between 30 and 45 minutes. As Krista had mentioned, a buyer agency agreement does need to be in place beforehand before looking at properties. And as always, unless you are a cash buyer, make sure your pre-approval letter is updated. Sometimes people get it months ago. It just needs to be updated. It takes your lender just a few seconds to do that, but keep that updated so that you're ready to make offers. One last pro tip is you can take a couple minutes, you can take a little bit of time with your buyer agent and make a mock offer. Go look at a house you have no interest in buying, come back to the office, sit down and make a mock offer. And what that does is it really brings to the surface a lot of questions that a buyer might have about the process, about the timing, about the contingencies, about the contract itself. So it's a really great exercise, and it's not the most fun thing, I'll give you that. But it does make your next, when you do find the house you want to pursue seriously, it makes it so much easier to get that offer written, and you can do it faster and smoother and easier, and it just makes it more likely for you to win, especially in a multiple offer situation. I didn't answer I forgot to ask this question, but the question was, when's the best time to buy a house in Vermont? It's a trick question. It's whenever the right time is for you. There's closings in every month. There's contracts in every month. There's new listings in every month. So whenever the right time for you is to buy a house, that's the right time. So next up, we have Kate Root. Kate's going to talk about some of the nuts and bolts of an actual offer and what negotiations look like so that you as a buyer can set yourself up to have the greatest chance of success and get the home that you want to buy. So Kate, I'll turn it over to you.
Thank you, Ray. So all of this info brings us to the most asked question that I get as a buyer's agent in a low inventory market. Almost every buyer looks at me and says, what should I offer? You tell me, what should I offer? And after factoring in all you've learned from your lender about your financial situation, the following questions come into play when you're ready to make your offer. And keep in mind, every house is a case-by-case situation. So this is why you have to look at the property and ask yourself, a few questions. So, is this an equity builder? Is this at the top of the market? Is this your dream house? How many showings are there? Do they have any other offers? For instance, the question about it being an equity builder or not, when you're looking at a home, if you are looking at the very top of your budget and it's a house that is completely renovated and, completely move-in ready and at the top of your price point, that's not what we consider an equity builder, because when you move in, there's really nothing you can do to increase the future value. So that's going to affect how much you can offer too, because you have to think about, your future and resale and things like that. And so when you look at each property, the answers to these types of questions can help you and your agent decide what is best to offer. And you can make a good offer a couple of different ways, and that's kind of what I'm talking about here. So when you want to make an offer that helps you hit your number one goal, and the number one goal is to get the house. We're not in the market just to tour homes and see pretty neighborhoods. We want you to become a homeowner and start building your real estate wealth. And sometimes, as you know, you do have to spend money to make money. If you're competing against another buyer or many other buyers, you need to make a really strong offer. And when you look at what the asking price is, you want to look at that as a starting point, and when supply is down and demand is up. So you should be prepared to pay at least the asking price or above, as long as you and your buyer's agent believe it's a good buy. Essentially, put your money where your mouth is when you know that it's a competitive situation. And learning whether or not it's a competitive situation is what you get from getting the answers to those previous questions in the previous slide. And then when it comes to negotiating your offer, the definition of negotiation is a discussion aimed at reaching an agreement. So we need to keep that in mind. You need to keep that at the front of your of your mind when you are going into a contract. This is an open discussion. It's not meant to be adversarial. Many buyers start out with statements like "I want" or "I'd never budge on," and what a buyer really wants is to be able to buy the house, and what the seller wants is to sell the house. So we need to be thinking from their perspective, how can we appeal to them? If I were the seller, would I accept my offer knowing that I have 3 others behind me? And that's kind of the key to effective negotiation, by viewing it as an open discussion between 2 parties who both really want the same thing. The seller is just looking out for their best interests, and so are you as the buyer. And then if a home hits the market and it's in a competitive sector, it's going to get a lot of attention. When I say competitive sector, I mean a price point that there are a lot of buyers in, a lot of, a concentrated amount of buyers in. So say, kind of the median home sale price in our area, which is central Vermont, is around $350,000. And so what that means is that's kind of the most common price point for buyers in the area. And so that makes that price point very competitive. So let's say you find the perfect house for $350,000. You're probably not going to be the only person that makes an offer on it. And so if that's the situation, that's when you want to go in strong with your offer. Now, if a home has been sitting on the market and it's not new, it's not really in a competitive price point, that may be one that is where the sellers are more willing to negotiate on price or terms. And speaking of price, we talk a lot about price. We talk a lot about, making an offer over the asking price or negotiating on that number. But it's not the only way, or not the only part of the offer that matters to the seller and that matters to you. Most offers are structured fairly the same. They have a purchase price, a contract date. The earnest money deposit is basically like when you buy a car, you put, $1,000 down on the car to hold it so the next guy doesn't get it. But with this, we usually say you want to put down at least 1% of the purchase price, and the more the better, because it just shows that you're serious and this is what's holding the contract for you. And then contingencies, which we will get to on the next slide. The title search is what a Vermont real estate attorney will do for you to go back through the records of the home or the property to make sure that every time it has changed hands, it was done correctly, and that there's no one else that has a claim to the property before you try to get your claim to it. And then the closing date is pretty self-explanatory. That is when the house is you're going to have your closing and you're going to take ownership of the home. That's also the day that all of your utilities and things need to start from. The closing usually happens no less than 7 days from contract date, and most of the time it's 6 to 8 weeks because it takes time for these things to go through. So those are kind of the boilerplate parts of the offer, but there's the contingencies are the thing that we kind of pay attention to the most besides price. Let's see here. What is a contingency? The definition of a contingency, we can read this, is in real estate, a contingency is a condition or clause in a purchase and sale agreement that must be met before the sale can be finalized. So basically, when you're going into a home, you're not going to really get all the info that you need from a 30-minute showing. A lot of times buyers will put a contingency on their offer saying, I will pay you $400,000 if I get the chance to inspect the property within a certain amount of time, or and things like financing and appraisal are also contingencies. And basically, when you write your offer, you're going to add these in there to protect yourself, and then the seller has to agree or not agree to sign that. So why do you want or need them? I'm sure you've heard a story from a friend or family that said, So someone came in and bought our house out of state and they paid cash for the house with no contingencies. This is actually more rare than you think. These stories are kind of anecdotal, and you hear a lot of them out there about, cash buyers and everything. Statistically, we know that around 60 to 65% of home sales in Vermont are financed, or they have been financed within the past year. And contingencies exist because you can't possibly know everything about the house, which I said before. They protect the buyer from the unknown along the process. They help minimize risk to the buyer because they give you an opportunity to cancel the contract if you find out something along the way that you can't handle or that is going to be a deal breaker for you. Now, that also means that as the number of contingencies in your offer grow, it is more of a risk to the seller because every single one of them is a chance for the contract to fall apart and for the seller to lose the buyer. Now, the most common ones are financing, inspection, and appraisal. And some less common ones are home sale. Sometimes people do need to sell a house to buy a house because they need the proceeds from the sale for their down payment. And then miscellaneous, like we say in real estate, everything is negotiable. So many times people put kind of weird things in their offers sometimes. And so it's kind of a case-by-case thing, like we said. And then this just goes back to effective negotiating. How do we position our contingencies to protect the buyer's investment while also alleviating the seller's doubt about the contract? Sellers are historically risk averse, so they may wonder, will the buyer's financing contingency fail? What if they can't get financing? What if the buyer's home doesn't sell and so they won't have their proceeds for their purchase? What if they want us, what if they have an inspection and they want us to fix 25 minuscule items and just become a huge pain in the butt? And what if they offer over asking price and the appraisal comes in low? So let's say your offer is, going back to the appraisal, let's say your offer is $10,000 over the asking price because you knew that you had to be really strong with your price when you came in. And you are a financed buyer, so you have a financing contingency. When you have a financing contingency, the bank is usually will require that the home has a third-party appraisal. And so many times you will have an appraisal contingency as part of your offer saying that it needs to appraise for whatever the contract price is. But since you are $10,000 over the asking price, to strengthen this offer, you may want to waive that appraisal and agree to put down more cash if it appraises at the asking price, which would be $10,000 lower, just because that would strengthen your offer, and it would reduce the seller's risk of the contract falling apart. And so that's one way to negotiate in a way that is going to get you the house, and it's not gonna cause the sellers to decide to go with a different offer. In the seller's market, you definitely you want to limit your contingencies, but you still want to keep yourself protected. And the offer process in general is very multifaceted and variable. So it's really important to have a good team behind you between your lender, your buyer's agent, and your attorney to help you get the results that you want. And many of this also goes into multifamily purchases, which is like a duplex or a triplex or apartment houses. And so now Ray is going to talk about that a little bit.
Thank you. Thanks, Kate. Yeah, so another path to home ownership that I personally love is buying a multifamily property. And like Kate said, by multifamily here, it's almost always going to be a duplex. People do get into home ownership by buying 3 and 4 unit buildings, but it's almost always a duplex. So here we're going to talk about buying a duplex and living in half of it and renting the other half out. And here's what I love about it. If you're a first-time buyer, you're likely living in an apartment or you're renting a house right now. So the change in living Go back to yeah. So the change in living isn't really very much. But one huge difference is that you have a lot more to say about who your neighbor is, who your tenant is, instead of that choice being entirely your landlord's. Another huge difference is that it's your building. So if you want to get a dog or plant a garden or paint a wall or have friends over, you don't have to get anyone's permission. You might be able to afford more on a duplex than with a single family home or with a condo. You're going to want to check with your lender about how much of the rent you can count toward your qualifying ratios, or you can ask your buyer agent. They can have that conversation with your lender too. All lenders and situations are different, but it is super common to be able to count on a good portion of that rental income toward your income to debt ratio, that the one that Patty was talking about earlier. And if you don't need the rental income to increase your purchasing power, you can still use the rent to just, like have more money, which is good. The next slide gets into some of the nitty gritty, and you'll get these slides after the webinar. But the gist of it is that if you have a tenant paying a chunk of the total cost of your home ownership, you get to control the whole building for a lot less of the monthly payment. And that also means that you benefit from the appreciation of the whole building. So if you had a building that was $260,000 and it appreciated by 5%, well, then you'd have $13,000 in equity in that 1 year. Now, that's not money that you can spend at the store, but it is part of growing your net worth. And it is money that you can use if you decide to buy a single family home by either selling the duplex later or by taking a home equity line of credit. Again, I don't want to get in the weeds on this, and your buyer agent will be able to walk you through your options, but just it's I guess what I'd say is it's not for everyone, but it is for some people. And for some people, it's a really great way to get into home ownership and to start building that worth. And it's something that a lot of home buyers overlook, and a lot of buyer agents will overlook it too. So you might find that you have a lot less competition. Okay, I have the next section as well, which is awesome. Okay, so we're going to talk next about how's the market. That sounds like a rhetorical question, as realtors get that question all the time. But when you're trying to buy a house, how's the market becomes a very relevant question. You're going to want reliable data. And remember that data isn't good or bad. It's just helpful. Data is always helpful. To be a successful buyer, you need to know what's going on in the market that you're looking in. There are a few particular pieces of data that are super important, and they'll help you decide, like Kate was saying earlier, how much you might want to offer, when you can offer less, etc. But basically, if you know what's going on, then you're way less likely to overpay and still get the house that you want. So on this slide, some recent sales in Montpelier. Stay here for a second. I'm going to run through some of these key metrics, and just remember that it's going to be helpful to have different towns, locations, types of house, etc. for your own home search, your own data, and your buyer agent will be able to help you with all that data. So this is a great time for a shameless promotion. Greenlight Real Estate, I looked this up, has helped more than 400 buyers win at home buying, like buying a house in just the past 5 years. We can help you too. Okay, so on this slide, we start by this is someone looking for a home in Montpelier. Well, what kinds of homes sell and at what prices? You can see there's a huge range. These are just the last 10 or so homes, from 180 to 600. And that slide, you see the picture there, sold for 540. There's a huge range. The next slide is the days on market. And the days on market really just shows how long it takes for a property to go from offer to have an offer accepted. Obviously, the shorter the days on market, the faster it's moving. And here's how the median days on market's changed over the past few years. You can see, so in real estate, we kind of use COVID as a dividing line, like before and after. But what's interesting is that the days on market in 2024 is pretty much the same, or exactly the same, as it was in 2021 when the market was really hot, when everybody was talking, right? So when people tell you, oh, it's nothing like as hard as it was when we bought in 2021, they're wrong. It's still hard, but that's okay. We got you. We know how to help you. let's just stay on the slide, but look at Washington County. Even the 9 days on the market is a little bit misleading, because a property might go on the market on Thursday, no showings until Saturday, so that's 3 days, Thursday, Friday, Saturday. And then it takes a day or two for offers to come in and to negotiate. So 9 days gets chewed up quick. The point is, things are moving quickly. And the more prepared you are as a buyer, the more success you're going to have. The next slide goes into another really important piece of data, the median sale price. It just gives an idea of what you're likely to spend. So if you want an average Montpelier home, you're looking to pay $500,000. If you want something a little bit above, if you want something a little bit above average or a little bit below average, that's awesome. Just to adjust your budget accordingly. I actually don't love county-wide numbers for home values just because there's such a huge wide range between them. This is sort of an aside here, but like Lamoille County is one of my favorites, where the median sale price in Wolcott is $284,000, and in Stowe it's $1.26 million. So kind of a wide range if you're talking about county-wide numbers, but still good to know. And then of course you'd want to work with your buyer agent to figure out median sale prices in the towns and markets that you want. That could be subsections like housing types. With the next slide, we're going to get a little deeper into the numbers. Okay, so the ratio of the sale price to the list price, statewide or townwide, can give you an idea of whether you're going to have to pay close to the asking price, or whether you might have to pay over, or whether you might actually have room to come in below the asking price. This is another piece that Kate was talking about earlier, just that the more you know, and the more that your buyer agent knows about how the market is actually performing, the better position you'll be in to win, buy a house without overpaying. The truth is that looking at these numbers, in general, places are selling near their asking prices, but not always. It's a good idea to plan on paying near the asking price just in case, but so you're prepared, but you might not have to. This is also a good estimate for how popular a place is. Properties that go above asking price, that suggests that there were multiple offers. There were multiple buyers who made offers, and those that went close to the asking price or below probably only had one offer. Your buyer agent should be able to read those tea leaves and give some guidance about an offer so you're not overpaying, but also so that you make a competitive offer so that you win the house. Because remember, the goal is to buy a home without overpaying and not giving away your contingencies. You're gonna need to make competitive offers. The last slide is a little bit of a myth buster slide. I just love this one. Next time someone tells you that every place is being sold for cash, like Kate was saying, it's not true. Here's the data. In the past year, 60%, a little more than 60% of sales were financed. That number has gone down over the past few years, but still, way more than half of the sales have a mortgage. So keep that in mind. If you're buying with a mortgage, you're not alone. Sellers are accepting financed offers, despite what your friends are telling you. All right, so we've just about finished. We covered a lot of ground here. Overall timeline, financing, updates on rules, buyer agency, pre-approval, contingencies, making offers, knowing your budget, the state of the market, a lot. Each home search different. Each process is its own animal. And all of us here at Greenlight Real Estate, we all hope that this information has been helpful and that you can use it to help win at home buying, whether that's today or next week or next month or next year. I know that there are a couple of questions, and there's probably some people that maybe want to ask questions one-on-one, which is totally fine. Before we go to the question, I just want to put something out there. If you would like to know more about home buying, what the process is like, maybe you have some questions, you want to ask them privately, or if you'd like to connect with a Greenlight Real Estate agent privately again, or just schedule a 10 or 15-minute phone call, you can do that. It's free. There's no pressure. If you don't want to, that's okay too. You can hit the schedule now button that's there and schedule, or you can also email us at info@greenlight-realestate.com. Give us a call, whatever, you know how to reach us. Okay, so we do have a couple of questions. Krista, you drew the straw that says you get to get the questions.
Yes.
So thanks, Krista.
We answer a lot of questions as agents, and that is our job. And I always tell my buyers and sellers, there's no silly questions, and feel free to ask them multiple times, because this can be, no matter where you are in life, this can be a bit of a daunting process, and it's not something you do many times to get too used to it. So just, I have a few questions on my list, and I think we're taking them. So if anybody wants to submit them, um, one of the questions I get asked a lot is like, will I lose my deposit? You know, if I change my mind, um, if my loan doesn't come through, am I going to lose my deposit? Who wants to take a stab at the answer to that? Patty?
Sure. So, will you lose your deposit? It will depend if it's been written into the offer, or you didn't just change your mind and walk away
Right.
from it, and you have followed through, you
Yeah.
wouldn't lose
I,
your offer.
yeah, and I always tell buyers, of course you wouldn't, because if you have a good buyer's agent, that's one of my jobs, is to make sure that we stay within the timeline.
Right,
And buyers have usually typically two chances to get their deposit back: if they put in an inspection contingency or they put in a financing contingency. So long as you work within those dates that you promised you would, you're never going to be in jeopardy of losing your deposit. And a
right.
good buyer's agent will always keep those dates on their calendar and make sure that that money's protected. Here's another one. Why is the value on the tax bill so different from the asking price on the listing? Ray, I see you shaking your head. Would you take a stab at that one?
Oh my gosh, there's 1,000 reasons. First is the purpose of the. So you're talking about like the assessed value that the town
Right.
gives on the tax bill, and yeah. The purpose of the assessment is to get a market value for the town, or to get a value of the town of all of the taxable real estate, so that they can figure out what tax rate to apply to get the tax revenue to fill the budget that the town voted for, right? It doesn't have to relate to market value. So the purpose is different. The other, I mean, there's lots of differences. One is that sometimes the listers have never been to the property. Sometimes the assessments are years old, and also like assessors aren't real estate professionals. That's not the right way to say it. They're not dealing with buyers and sellers and buyer and seller behavior. It's one thing for me to say, oh, a 1,400 square foot house with 3 bedrooms and 2 acres in whatever town, that's worth X. Well, that's worth X maybe on the whole, but if that's exactly what a buyer wants, and there's nothing out there else that's like it, it's worth more than X. So a buyer could pay more because it's worth more to them, or they might pay less because it's worth less to them. So that's it. I'm Sagittarius. I got like 100 answers for every question. So I hope that worked.
Yeah. It's so fascinating how Vermont, every town is independent too, and you never really know, which town did their assessment when, and some of them can be pretty outdated. So unfortunately, buyers, you can't just look at the assessment and make your offer at that amount. That's not going to work. Let's see what else has come through. Maybe Kate can take one. What are some of the biggest issues discovered at home inspections?
Yeah, so home inspections are kind of tough because a home inspector can't go into a house and bust through a wall to see if there's like a mold issue or something. What they inspect are what are called patent defects, which means, things you can kind of see with the naked eye. Typically the really expensive fixes are what we call latent defects, which are things that are beneath the surface that you might not know about every day, that you're going to find out, like you have a crack in your sewer pipe, or you have, you've got a corner of your foundation that's crumbling. Or most recently at my own home, we found out that our sewer pipe went underneath the footing of our house. And so when we had to replace it, we had to completely not us, but the people doing it had to shut off that old one and put a new one in. So the home inspection is going to look at things like the condition of the roof. So the inspector will get into the attic and will look at the underneath of the roof as well as the surface of the roof. They'll look at the chimney. Sometimes you can have an inspector that will do a scoping of the sewer line, which is important because that's, you know, your responsibility when you move in. And, you know, they look for things like mold. They look for things like, you know, an unsettled foundation. But an inspector really can't diagnose things. They can give their opinion. And then what you have to do is kind of get like a contractor to come and diagnose what's going on. So long story short, they can find a lot of things, but the most serious things sometimes are hidden.
Kate, can I throw a follow-up at you, put you on the spot here? So all those things you mentioned, like mold, foundation, or this or that, seller's got to fix all those stuff, right?
No. Everything is negotiable in a real estate contract. So your inspection is basically for your own information, and it is your contingency to let you find out whether or not you personally can take on this home, or if you're in your inspection and you find, you know, A, B, and C items that need to be fixed, you do have the opportunity to go to the seller and say, hey, I still want to buy the house if these 3 things are fixed before closing. And the seller can either say yes or no to that. It's going to depend on the seller's motivation and the situation too. You know, if they don't have the ability to fix things, or they don't have the desire to fix things, if they just want everything to be easy and off their plate, they may not want to negotiate on that. So another way to do it is to say, hey, we found out that there is a portion of the roof that needs to be replaced as soon as we move in. It's going to cost $5,000. Will you take $5,000 less on the purchase price? And if that's agreeable to the seller, then that might happen. And then you just have to do an addendum to the contract saying that you're going to change the price. Or the seller could come back and say, we won't do 5, but we'll do 2,500. So again, it's all about negotiating and doing it in a way that you're not adversarial, like I said before. Like you're just like genuinely just wanting to get through the contract and keep everything above board. So
Yeah. And I think even if you're not able to use it as a negotiating tool, the report that the inspectors create with so much information in it can also just be a really good guide for your homeownership and for planning, you know, things that you will need to address down the line, just to be more informed of what you're buying. Sometimes you can negotiate, but it's always a good idea to do one, even if you don't get to negotiate after.
right. And it's also good. We like to make a point of telling buyers that it's good for you to attend the inspection.
Yes.
And not just rely on the inspector's report, because if you're actually at the inspection, you can actively ask questions of the inspector. And a lot of times on paper, an issue might look really scary just because of the way it's described. But when you actually talk it out with the inspector, it's not as bad as you think. So
And I would also say, like, your buyer agent should be at the inspection too, because buyer agents, like, I don't know, I would bet everybody, I don't know, between the 4 of us, we probably been on 1,000 property inspections. And so we see things, and so we can, like, someone might look just like, I don't know what's wrong with that, but something's wrong with that. And I can ask that of the inspector that a buyer might not notice, and then we can start talking about it.
Yeah. And it may even be a good question when you're interviewing agents to ask a buyer's agent, how many home inspections have you attended? Because I'm sure I speak for all of us. I've learned so much myself as a buyer's agent by attending those home inspections.
Mm-hmm.
We're kind of coming down into the end of the hour. All of us are going to hang out if folks want to stay longer to ask even more questions, or you're welcome to set up a phone call or meeting with any of us. But I'll throw out one more question while we have a few more minutes. This is one I've heard a lot lately with the current events. Is it true that sellers don't have to help pay buyers agents anymore? It's somewhat of a trick question, because to say that they don't have to anymore would imply that they used to have to. And the truth of the matter is, it has always been negotiable how much a seller is going to offer out. And so it's going to be a case by case basis. Your agent's going to have to do a little digging to find out if and how much of your buyer's agent's commission will be covered through the transaction.
I think it's also, that's a really good question. That's a question to ask also when you're interviewing buyers. It's like, how are you handling this? How are you doing this to protect me as a buyer? So it's in my best interest as a buyer. That's a good question to ask. And then, that answer should probably make sense to you. It should make sense to you if you're going to get in a contract with a buyer agent.
Yeah. Well, I hope this has been really helpful for those of you who have joined us, and we'll send along all of the slides as well for more information and more resources. And like I said before, there's no silly questions. Even if we went over something tonight and you want to talk more about it, we're happy to talk about this stuff. We all really love helping people make some of the most important decisions of their lives. It's really confidential, important information, and we really like to take the best care of all of our buyers and sellers. So you'd be in good hands working with us, and reach out if you have any further questions. And if you want to stay on the line, please feel free.